Right guys, welcome back. In today's video, I'll be going over the 5 steps you need to master in becoming a consistently profitable trader. Now these 5 steps I came up with through my own journey of gaining profitability, and the 5 principles you need to master are direction, timing, stop loss and take profit placement, risk management and psychology. Now right now you may not understand all these 5 principles, and I'll be going through it in more detail, but what you need to bear in mind is every time you take a loss, you need to think back to yourself and understand which one or more of these factors contributed to you in taking that loss. So whenever you take a loss, I can almost guarantee you it was one of these 5 factors which caused you to make that or take that loss. Now when you do go back and analyze those trades, you can then start narrowing down your weaknesses and understanding what you may need to do through whether it's backtesting or researching online to improve that weakness you have. Now for all the beginners out there, the first thing you need to start thinking about is how you're going to determine the direction of the market. Because if you're not able to correctly and consistently identify the trend of the market, it's going to be very difficult for you to then move on to the next principles such as timing and risk management, because you can't even get started with risk management when all you're doing is taking losses. So the best thing to understand the direction is knowing the trend. You need to look at different time frames and see what the trend is on each different time frames and use them in correlation with one another to determine the trend of the market and stick with that. There's this famous saying where it says the trend is your friend, and it's very true even in my own trading experience. Now as we speak, I'm working on a in-depth strategy which I'll be giving out to you guys on how you can learn my strategy and how I determine the direction. But as of this video, we're just going through the general principles of what you guys need to go out and learn yourselves to master and become consistently profitable. Now another tip I can give you guys to determine the direction is to use moving averages. Now although they're not perfect, moving averages can give you a rough idea of where the trend is heading and what sort of momentum is stronger. So personally for myself, I like to use the 20 and the 50 EMA, and I use that with structure to be able to identify my trend and stick with that bias as I look to take further trade. Now the next thing, once you've mastered direction, is timing. Timing has many different principles in it, such as being able to identify the correct level you want to be taking your trade off, being able to identify the right time you want to enter, and you don't want to enter too early and risk getting potentially manipulated out of the market with a nasty wick. Timing also consists of things like what session you want to be taking the trades in and understanding what times of the day have the most momentum for you to capitalize off that price action. So I hope you guys start to understand a bit more how we're building up a story of our strategy. So first, being able to identify the direction, and then knowing which structure point we want to be taking those buys or sells off of, and then knowing which structure point we want to take our trade off of in line with our bias. Then we can move on to stop loss and take profit placement. Now this is then the third principle. Once you're able to take that trade, you want to then know where you're going to be placing your stop loss and where you're going to be placing your take profit. Now this comes down to again you doing your own research and understanding what works best for you. Now there's no shortcut to this. It does take a lot of experience and there's no other way around it, but you can cut down that learning curve through back testing a lot and testing out all the different types of stop loss placement and take profit placement you can use and see which is most profitable for your own strategy. For me personally, I always like to place my stop loss below the swing low point, and I like to give it a bit of breathing room just in case price does want to come back down and retest that low before pushing back up again. In terms of take profit placement, I like to target previous levels of structure, but sometimes price doesn't reach that, so I have other different strategies which I can implement in knowing when I should take profit. Now I feel like with the next principle, which is risk management, a lot of people do struggle with that because they're coming into the markets wanting to get rich quick. Now risk management is definitely one of the most important principles because that can make or break your trading. You could blow your account very quickly if you're not using good risk management. So risk management consists of things like how much are you going to be risking per trade. It consists of how many trades are you going to be taking per day or per session. it consists of things like, if you do take consistent losses, let's say 3 in a row, what is then your risk management plan? Are you going to stop trading for the week? How are you going to adjust your risk size? Are you going to drop your risk down by 0.5%? Like, it comes down to different layers of risk management. Now, for beginner traders, I would definitely recommend using as low of a risk as possible when you're starting off, because you want to maximize the amount of trade you're taking before your account is blown. So I would recommend for all beginner traders to be risking 0.5%, because you're not trying to make money, you're trying to gain experience in the market, you're trying to understand how the market moves and just improve your trading in the real life markets. So risking 0.5% to begin with is definitely recommended, and as you get more and more experience and you gain more and more confidence, then you can start increasing your risk, because you understand you have a better accuracy, a better risk to reward, and over the long run, even if you lose a bit more, you will make profit at the end. Now, I am going through all of these principles pretty quickly because I just want to give you guys an outline on what it takes to become consistently profitable. It comes down to you guys mastering each and every single principle and not moving on until you feel confident that you are able to achieve all of that. Now, the last principle is psychology, which again is a lot of things experienced traders do battle with. Psychology does come into play for people that have now created a successful strategy. They've back tested it, they do understand the pros and cons of it, the weaknesses, and are able to make consistent profits from it. Now, psychology comes into play because you can have that fear of missing out, you can have that greed factor coming into play. You can also have fear when you're in profit and you see price reacting off a certain level and you're not sticking to your strategy because you feel like it might reverse any second. So what tends to happen is you start holding your losers for longer and cutting your profits very short because of that psychology. So again, it's very difficult to try and help people with psychology other than giving advice, obviously, because psychology is something you need to overcome yourself through experience, through mentally training yourself and just conditioning yourself to understand when those fears kick in and be able to discipline yourself to stick to your strategy and not let those fears take control of your trading. Right, so having said all of that, to quickly summarize everything, these 5 principles are something you guys need to master in order to become consistently profitable and to become a well-rounded trader. If you're not able to master one of these 5 principles, it can leave a hole in your trading where you can see weaknesses propping up now and then. And I definitely do emphasize that point because it was something that was affecting me in my trading, to the point where I had to sit down and really break down all the different elements that play a part in trading and then focusing on each and every single one to be able to understand my weaknesses and my strengths. And that's how I came up with these 5 principles. I hope you guys did benefit from some of the experience I've gained. If you did, be sure to like this video, drop any comments on any further videos you would like to see, and other than that, I'll see you guys next time.